The recession indicators, the long-term, when I say long-term, I mean the ones that have the best track record of being good predictors as further in advance, have been signaling a recession for a long time. So a lot of economists, and I would include myself, have said, there was going to be a recession in 2023. According to the data, that didn't happen. Maybe we fell into one around November, December. We won't know for another 4 or 5 months. We'll see what happens. But it doesn't mean that the warnings were wrong, and it doesn't mean that we won't have a recession. It just means that it has taken longer to unfold than a lot of people expected. But now those same signs are actually getting worse. And, I'm sure you've heard there was some very good analysis from a number of people. Jeff Snyder, Stephanie Pomboy, Sarge, Steve Guilfoyle, New York Stock Exchange, and others, about how that unemployment report, the employment report that came out about a week ago, was completely misread. I mean, that was, the stock market went up, unemployment, job creation exceeded expectations, unemployment remained constant. That was consistent with the happy talk, with the Goldilocks narrative, soft landing narrative, et cetera. And so it kind of stocks rallied on that. But if you look behind the numbers, there are two surveys. One of them showed about 220,000 jobs created. The other one showed 1.5 million full-time jobs lost. And then there were about 700,000, a little more, part-time jobs created. So if you net the two, you still lost 750,000 full-time jobs. And then, of course, part-time jobs aren't nearly as rewarding as full-time jobs. And then they'll show that, hourly wages went up. Okay, but there were fewer hours worked. That's how employers are managing the costs. Like, I'll pay a little more, but you work 30 hours instead of 40, so you're making less money. So there was, and then they gave a downward revision to the prior months. And for 12 months in a row, 11 out of the 12 months, they have downwardly revised the prior month's number. So why should we have any confidence in the 220? Because that's probably going to get downwardly revised next month. And when you're like 11 out of 12 months, that's not random. There's a certain amount of noise in the data. Everybody understands that, but that's something seriously flawed in the model. You don't get that. It's like, rolling the dice, getting a 6 11 times in a row. It doesn't happen, or it's extremely rare. So there's something wrong with the model. So there's a lot less there than meets the eye. I think our luck has run out, if you want to put it that way. Germany's in recession. They just are. That data is clear, and it's getting worse. Japan is kind of right on the edge, might be in recession. UK, same thing, right on the edge. China, saying China's in recession is probably a stretch. But if in China, if the growth goes from 10% to 7% to 5% to 4%, which it has over the last 10 years, that lost output is equivalent to a recession. China's trying to prop up their economy, so their economy is doing very poorly. When I see things like world trade contracting, with the trade figures, everyone focuses on surplus or deficit. So you have a trade surplus, your GDP goes up. You have a trade deficit, your GDP goes down. Or did the deficit shrink? That makes GDP a little higher, et cetera. Forget about that. I mean, okay, it's important data, but if you look at the top line, the exports and the imports, they're both shrinking. So whether the deficit gets a little bigger or a little smaller is less compelling, less important than the fact that both numbers are going down. World trade is shrinking, and that almost never happens except in recessions or during the Great Depression. The Fed, of course, always says we're not political. We do what we're supposed to do. We follow the models. We're not political at all. That's completely untrue. They're highly political. They watch the headlines very closely. So they're aware of it. And you have to sort of put Jay Powell in context. He is a Republican, but he's a Bush Republican. There's no reason to think he likes Donald Trump or is a Trump supporter, et cetera. He's not a Democrat, but he's the kind of Republican who doesn't really like Donald Trump. So my expectation is, the Fed for now is not going to cut interest rates. They're done raising. That's pretty clear. You'd have to have some kind of inflation shock before they raise rates. That is unlikely to happen. The rate of inflation is going down. Prices are still going up. That's a big point of confusion. So prices are going up, but the rate of increases dropped from 9% to 3% in the past 16 months. So that's progress. 3% is still well above the Fed's target of 2%, but they think they're at what they call the terminal rate. The terminal rate is the rate where it's high enough to bring inflation down without having to raise rates more. In other words, it's high enough to act as a brake. Just give it time, and inflation will come down on its own without further rate hikes. The Fed believes they're in that position. They won't be raising rates. So the question is, when when will they cut rates? The answer is when it's too late. Meaning the Fed are usually the last to know. And the best example I can give you, they pay enormous attention to what we just talked about, the unemployment rate. 3.7%. That's one of the lowest unemployment rates since the 1960s. I mean, it is extremely low. But they believe in this Phillips curve, and the Phillips curve is an inverse relationship between inflation and unemployment. So the view is if unemployment is low, inflation is going to get a little higher. If unemployment goes up, inflation goes down. So they're seeing unemployment extremely low and saying, well, that's a little bit of a danger in terms of inflation. So we can't cut rates. But in fact, there are a lot of problems with that. First of all, there's no evidence for the Phillips curve. I mean, I can give you, do a quad chart. I can show you high unemployment, high inflation in the late 1970s. I can show you low unemployment, low inflation, in the mid 2010s and so forth. So you can find every low unemployment and low inflation during the Great Depression. So there is no Phillips curve, or you constructed it. The Phillips curve, last time I looked, was a flat line, not much of a curve. So first of all, the Phillips curve is garbage. Secondly, employment is a lagging indicator. I'm not saying it's an unimportant number, but employers do everything possible to avoid laying people off. When revenues are drying up and margins are going down and profits are going down, they'll turn out the lights. They'll renegotiate the lease. They'll cut the laundry bill. They'll bargain harder with suppliers. They'll do everything they can except fire people, because people are hard to hire. You get the talent. It's hard to find. You train it. The last thing you want to do is fire them. So they will fire them. Unemployment will go up when they get desperate enough. But by then, the recession has already started. In other words, it's a lagging indicator that tells you nothing. So my point being, Jay Powell is looking at lagging indicators. If unemployment starts to go up, which I expect it will, he will cut rates, but we will already be in the recession. So he'll have political insurance, because he'll say, well, yeah, we're cutting rates, but hey, we're in a recession, we have to. It'll help him avoid the charge that he's doing it to help Biden. The charge will be made anyway. They'll be in the political crossfire, but the economy will be so bad at that point, no one's going to blame Jay Powell. There's so many things happening right now. I mean, why are we talking about the November 2024 election, and here we are in early 2024? The answer is there are things happening right now. Trump's on trial in 4 different jurisdictions, facing 90 plus criminal charges. There's a chance that he'll get convicted of something. I think actually that's a very high likelihood. Some of them will be dismissed, some of them he'll win, but he'll get convicted of something. Now, he might actually be in jail on election day. The orange man in the orange jumpsuit, but and this is something a lot of people don't understand, there is no legal or constitutional prohibition on electing a convicted felon to the presidency. So Trump could get convicted in this Fulton County case, although, as you know, that case is blowing up in the prosecutor's face. This Fani Willis has got her own scandal now. She might be, the case might actually be dismissed. We'll see. They're 2 different things. So what you're talking about, there's a name for it. It's called lawfare. Basically taking the law, I'm a lawyer, I practiced for decades, taking the law and weaponizing it and conducting warfare with the law. So that's what lawfare is. And basically going outside the boundaries of precedent, tradition, interpretation, etc., and using it as a weapon. Well, there's no doubt that that's what they've done against Trump. Now take this Bronx County business case, which is actually a civil case, where he's been accused of overstating the asset value of some properties on a loan application at Deutsche Bank. Well, first of all, Deutsche Bank's a pretty sophisticated bank. I assume they do their own diligence. They have their own appraisers. They made the loan. They got paid back with interest. They made a profit. Nobody lost any money. Show me a real estate developer in New York. Show me one who doesn't fade values depending on the context. I mean, I was tax counsel at Citibank for 10 years. It was the world's largest bank at the time. We had 5 sets of books, completely legitimate, by the way, just to be clear. We had generally accepted accounting principles, international accounting principles, tax books, cash books, and management profit reports, depending on who wanted to see which way. So, and they accused him of overstating the value of Mar-a-Lago to secure a loan, his place in Palm Beach. And they said, you overstated it because we have the appraised value for property tax purposes, which was, I think, $15 million. And everyone knows that property tax appraisals tend to be low relative to market valuation. And they got some independent brokers that said, are you kidding? That place is worth $150 million or more. But the judge, who was completely corrupt in my view, said, no, it was 15. You said you used a higher number on your loan application. But here's what they're going for it. The judge on day one, on the first day of the trial, he said Trump's guilty. He said, basically gave what's called a motion for summary judgment. The entire trial we've heard about is on damages. It's not whether he lied or not, according to the judge and the prosecutor. It's the damages. So first of all, he never really got a trial on the substance of what we're talking about. But their damage theory, the fines will be, so he's kind of already guilty. The fines they're talking about stripping his business license, turning his properties over to a receiver, like a trustee, basically. The receiver would then have the power to do what he or she wants with the properties, including sell them. And you say, well, wouldn't Donald Trump get the proceeds? And say, yeah, but they want to put a $300 million fine on Trump. So the first $300 million of profits would go back to the state of New York in the form of fines. This will destroy his business empire. He spent his life building. I mean, the properties will be gone. The money will be gone. His business license will be suspended. He won't be able to do business in New York. This isn't like a $10 million fine for a little typo on a loan application. They're destroying his business. But there isn't a property developer in New York who hasn't done the same thing, but they leave them alone. So this is an abuse of prosecutorial discretion. It's just one case, and we could go through Georgia, the classified documents case, the January 6th case, the Fulton County's, the RICO case, don't forget about our friend Stormy Daniels, with the hush money. I mean, I was a lawyer for 40 years. We had, every firm I worked for, and it's true of every firm in business, you have your share of complaints of various kinds. You generally tend to, you have a disgruntled employee or there's whatever. You investigate. They get their lawyer. You sit down. You negotiate it. You give them a settlement check. Nobody admits any wrongdoing, and you sign a non-disclosure agreement, and both sides go their way. That's how you settle those things. They're messy to litigate, and you don't want to do that. That's what is that hush money? I mean, you just settle a case and you give somebody some money, and you sign a non-disclosure agreement. Is everyone suddenly guilty of criminal hush money, which is what Alvin Bragg said? And he is kind of, let's face it, he's a lightweight, so there is no end to it. And by the way, quick footnote, every time they bring a new case, a new charge, make things worse, his poll ratings go up, his rankings go up.